All right, now if you have watched both videos of February 5th and February 6th live trading on gold live trade recap, you notice that I talk a lot about breakers and I talk about how I use them, how come they, I use them. I use them for, retracement. I use them for entries. I use them for a whole bunch of things, right? And in this video, I'm going to be explaining what a breaker is, okay? All right, so let's get started. So there are two kinds of breakers. There's a low to a high to a lower low, and this will be seen as your bullish breaker, okay? Low, high, lower, low. And to make this example easier, something that helped me a lot as well to learn was, was marking them out as A, B, and C, okay? I marked them out as A, B, and C points, okay? And who taught me this was Adonomics, okay? I did not teach this to myself. This was from another YouTuber as well that also gives out amazing knowledge out there. I recommend you guys to watch, get his fucking membership, do all that shit. He's an insane trader, okay? So, let's get started. A, B, C, low, high, lower, low, okay? This will be marked out as your bullish breaker. Bullish breaker, okay? Or this is the formation of a bullish breaker, right? When does the bullish breaker actually form? When we get a close above B, okay? And that close will be D, okay? That close will be D, okay? There it is. There's your close above B and creates D. Okay, this is your bullish breaker. A, B, C, D. Low, high, lower, low into the higher high. Low, high, lower, low into the higher high. Okay, this is your bullish breaker. Now, bearish breaker. It's going to be a high, high, low, higher high. Okay, high, low, higher high into the lower low, right? Perfect. So what do you think this is? This is going to be A, this is going to be B, this is going to be C. So if on this side, what formed the breaker? A close above B, what do you think is going to be, what forms the breaker on this side? A close below B. Perfect, right? So now, and the close below will be what? D, okay? Perfect. A, B, C, giving you D. Perfect. So, D, and this will be seen as your bearish breaker. Perfect. Let me capitalize the B on this side. Bullish breaker, bearish breaker. Perfect. Now, that's how you understand. Bullish breaker, low, high, lower, low, higher, high. Bearish breaker, high, low, higher, high, lower, low. Okay? Does that make sense? Yes, I hope it does. Okay? And now, how will I implement this into my trading? Perfect, right? So in a bullish standpoint, what do I see? What do I see this as, right? I see this as basically what most people say, a breakup structure, right? You can see this as a breakup structure or as, a retracement fair value gap. I always say breaker fair value gap unicorn in my other videos. I say, oh, that's a unicorn, right? So, but I want to talk a little bit more about the breakers, right? So as you can see, C always takes out A, right? Look, this is a low that's printed. C is always taken out. A is always taken out by what? C. Same thing on this side. What do we see? That A is taken out by C again. Okay? And then we get a close below, giving us the breaker to actually form. Where's the breaker? At B. Okay? At B. Same thing. At B. Perfect. Now, where do you think I'm going to enter my trades? If this is a breakup structure, your market structure shift, I want to wait for a retracement right here. There's going to be a most likely a fair value gap here. There is my short. For a bearish breaker, I'm going to short here. And for a bullish breaker, I'm going to long here. Okay. Boom. And this is how we implement the breaker strategy. This is how you implement breakers into your strategy, right? And now I'm going to put the title of this video for the sake of this thumbnail. Breaker strategy. Perfect, right here. That's going to be the thumbnail for this video. Perfect. All right, cool. So this is how you implement breakers into trading, right? So you get a low to a high to a lower low, and then you get the leg to close above B, a retracement to B, gives you a fair value gap, and you long, okay? Sometimes there'll be two fair value gaps, okay? And in this case scenario, there'll be two. So which one do you want to enter in? You can scale your way in, okay? I like to scale my way into tradings when there's two fair values. I usually enter with one lot, and then down here I'll enter with two, okay? Boom, and that's it, right? 1, 2. I like to pyramid. Why? Because if I'm, let's say the market is here, right? Let's delete this. And I had two lots right here, okay? As soon as we go above this high, above D, stop goes to break even, okay? And we're supposed to get big displacement. There'll be, if you watch my videos of Monday, this will make a lot of sense. Hence why I said you guys should watch those first. Okay. Perfect. Boom. We'll come back down to this. I will already be at break even. And what am I going to do? Add one more lot. So now I have two lots here, one lot here, and potentially a 0.5 up here. Why would I never have a two lot right here? Because if the market goes the other way and I have a one lot down here, the two lots will overweigh my one lot, and I'll be in drawdown, right? I'll be in drawdown. But I entered earlier. How come I'm in drawdown when only over here? Because you added a bigger position up here. You have to always add the lower position, the bigger position lower, right? That's why, hence why I talk about if there's two fair value gaps. If there's two fair value gaps, always scale your way in, right? By adding one lot here, two lots down here. Oh, but what if it leaves? Okay, fucking it leaves, and what's gonna happen? Nothing. You're still. That's why you added at least one lot. You're lucky you didn't wait until this, and then wait. You're lucky you didn't wait until this fair value gap is filled, and then it never got filled, and then it just left. Imagine you're waiting down here, and only this touched, and then it leaves, and then now you're gonna be really mad because you didn't enter not even one lot. So be grateful that you entered with one. Later on, pyramid with two. Don't be a greedy fucking bastard. Okay, there it is. So potentially, of course, ideally, you would want to see the second one get filled. Okay, but I'm just explaining certain scenarios you won't get that. There will be times where you just get this. Okay, perfect. So now I want to show you into a live chart. Looking into this, there is a 15-minute breaker. There's a low printed into a high, into a lower low down here. This is your low, right? It could be this one or this one. Low, high, lower low, right? If you look right across, there it is. One for value gap, two for value gap, right? There's your A point right here. Let me go even lower. A, B, C. To see this low is lower than this, right? So I'm gonna mark it out. A right here, B right here, C right here. Okay. Did C sweep A? Yeah, it did. Did C sweep A? Yeah, it did. C swept A. Did we close above B? Getting D? Yes, we did. There's a close. Is there your fair value gap? There is one right here. There's one right here. Let's go on the 15-minute. Make it a little bit more clear. Okay. There's your fair value gap number 1. Fair value gap number 2. What happened? You could have scaled one lot, two lots, and then what? This is your internal break even, targeting these highs. What happened? Look, TP1 hit right here. Well, you could break even, take off 25, but this could be TP1, TP2, and you're done. Let's say you want to hold it up to There's another fair value gap here. This was a 30-minute fair value gap. I remember I was looking at this as well. Boom. You can hold it up to these highs as well. Did you ever get stopped out? Did you ever get stopped out here? No. You scaled one in down here. No, you almost get stopped out right here from this wick. And then what did the price do? Go higher. Okay. Now that's how you would implement, okay, the strategy. Again, they happen all the time. I'm going to go. There is a breaker entry within the breaker. Okay, look at this. This is the 15-minute time frame. I promise you I'll find one right here. And you know why I promise you? Because I did that shit today. All right, so now zooming in, what do we see? Another breaker within the breaker I was talking about. Where's A? A is right here. B is right here. Oops. C is right here. Okay. First things first. Was A swept by C? It was. Okay. Did we get a close above B? There was. Yes, we did. Where's D? Right here. Okay. Where's the fair value gap? Retracement? Right here. Let me delete one in the background. Boom. And see how we're also, again, see how we're respecting the consequent encroachment of this fair value gap? By that I mean the half point. Look at the half threshold. Do the bodies ever close below? No, they don't. Meaning we're about to get a huge delivery higher. Okay. This is how you implement breakers into your trading. Okay. Alright, so I hope you guys enjoyed this video. And hope you guys learned something. Check this out for yourself. Write it down. Take some notes on these videos. Back test it for yourself. And you'll see the results. Trust the breakers, trust the process, wait for the displacement, wait for the breaker to form, wait for the close above B or the close below B, depending if it's bullish or bearish. Wait for the retracement, look at the fair value gaps, scale your way in, and take it slow, one day at a time.